Hi, Mark Dannenberg with Options Moneymaker here, talking about simplifying your trading for bigger profits. We're going to continue our discussion about using simple charting tools. 30 and 60-minute charts are ideal for determining the directional bias of an index, and you know that we trade three major indexes. The very first key to being successful as a trader is understanding what that directional movement is likely to be. And it's not really a mystery. You can identify it very simply by using 30 and 60-minute time periods. So what I'm showing you here is a 30-minute chart. And there are all sorts of opportunities for profits built into this 30-minute chart. And they're not a mystery. You can see them very clearly once you start to work with it. First of all, we have a rising cycle right here that we're currently trading in. This was preceded by a declining cycle, and before that we had a rising cycle. So it's not at all unusual to expect that we might very shortly see another declining cycle. Each of those cycles is sitting inside of a longer term channel that mostly is indicating a sideways trending pattern. We closed this week at the top of the channel. So on this particular price bar, we closed at the very top of the sideways channel. Since we are in a rising cycle, we are expecting a declining cycle to start forming at some point. It doesn't guarantee, just because we're trading at resistance of this sideways pattern, that we're going to immediately see a movement lower. But you can see here that we're trading at resistance of the sideways pattern, and we're also trading at resistance of a declining pattern. So we're trading at the convergence of two different levels of resistance. In addition to that, we're trading at the upper Bollinger Band. All of this tells us that there is a high likelihood that we're going to start seeing some sort of a declining movement. Now, what I'm always amused by is people who will challenge me and say, well, such and such a movement happened because of this particular piece of news or this particular event in the world, or some country made some economic decision that had either a very positive or a very negative impact on the market. When those moves occur, because I have a tendency not to listen to news, financial media, I look at the chart and I ask myself, did that move deviate from its prior defined pattern? Did it deviate from a pattern that it had already established? And if the answer is no, then whatever chaos, whatever event, whatever news story occurred, all it did was it caused the index to move within its own natural boundaries. And you, as a trader, can very simply identify what those potential movements will be. If I back up to August 24th and I take a look at what was described as an unprecedented move down in the market, and I back up, although I make my trading decisions on 30 and 60-minute time periods, I back up to a 1-year daily chart, I can see that there is a long-term pattern here. It's actually a 6.5-year pattern. And you can see here that for the most part, all activity has occurred within the parameters of that channel in the last 6.5 years. When we saw that unprecedented move lower, all it did was move right down to support of our 6.5-year channel before it bounced back higher. This is exactly why you use Bollinger Bands and why you use support and resistance to identify where those particular movements will be.